In what might be the biggest milestone for Bitcoin in 2025, Michael Saylor's strategy just got the first ever credit rating by a Bitcoin or for a Bitcoin Treasury Company. But many are not that happy about the results. Does S&P Global just completely misunderstand what strategy is doing or even what Bitcoin is? Or are they purposely misleading investors to stay away from Bitcoin and Bitcoin exposure products? We'll break all this down on today's video. All right, guys. So as you can tell from the title, of course, I'm here with Sophie. She's been holding it down with me. MicroStrategy Saylor or Strategy, Michael Saylor's company, got the first credit rating, and a lot of Bitcoiners are pointing out just how historic this actually is, though they're not so happy with the results. But I think it is telling us a lot about where we are in the story. I think it's really telling us just how early we are in Bitcoin. I know everyone's been saying this for a long time. We're early to Bitcoin. It's still early, guys. I know we're at 100K, but it's still early. And I think this is one of those signs that just continues to show us how early we are. So I got Creases here just to start us off. And he goes, this is the biggest milestone for Bitcoin as an asset this year. The era of digital credit has begun. Now, a lot of people have been saying this isn't a milestone for Bitcoin. This is a big milestone for the credit or Bitcoin treasury companies. But I think what it is showing us is, one, of course, they actually gave them a credit rating, which is it would be unheard of 5 years ago. To see where we have come to this point, even if it's not exactly the results as Bitcoiners are looking at, it's still just incredible where we are. And then I've heard other a little more cynical Bitcoiners say, look, I thought we were in Bitcoin to get away from the traditional financial system, and here we are applauding credit ratings. Like, what are we doing? I'm going to break all this down for you guys. I'll give you my points of view on this, and I truly do think this is one of those significant moments. And you'll understand why at this next kind of screen share where I show you exactly what they said. So here's Saylor's tweet. And he goes, here, let me zoom in. He goes, S&P Global Ratings have assigned Strategy Inc. a B- issuer credit rating with, parentheses, outlook stable, the first ever rating of a Bitcoin treasury company by a major credit rating agency. Now, going into the official press release here, we will break down what is going on, what they did. So here is the press release from S&P Global, and it goes, Strategy Inc. to sign a B- issue credit rating, outlook stable. And if you don't understand credit ratings, this is really, off the rip up front, not a good credit rating. And we'll kind of troll that a little bit later on in the segment. So I am going to read a little bit, guys. I know Opti read along today, but I think there's a lot of important information to garner from reading this press release. It really tells us what they think about Bitcoin and further what they think about Bitcoin treasury companies. So first bullet point, Strategy, formerly MicroStrategy, is a Bitcoin treasury company that uses proceeds from the issuance of equity and debt financings to accumulate Bitcoin on its balance sheet. Obviously, you guys know exactly what they're doing. The company's securities provide investors varying degree of exposure to Bitcoin across its capital structure. The company also has a relatively small software business that provides AI-powered enterprise analytics. I really like that a lot. Yeah, they just buy Bitcoin, but they also kind of have a small business.
They love to hate Saylor, honestly. Like, it's either they love to hate him because of how, well this strategy, for lack of a better word, has gone for him, or they might be trying to suppress the price. I don't know.
Well, I don't know if it's necessarily suppressing the price. I think you'll see in this next portion here exactly what they think about Bitcoin, and I think that's like the big kind of takeaway from.
I don't even need to read to know. Wrong.
Totally. Okay, so I'm gonna read a lot of this, guys. I apologize up front. So we view Strategy's high Bitcoin concentration, narrow business focus, weak risk-adjusted capitalization, and low US dollar liquidity as weaknesses. These are only partially offset by the company's strong access to capital markets and prudent management of its capital structure, including maintaining no maturities in the next 12 months and financing its business primarily with equity. Again, they gave them a B- rating, which is basically a junk rating. It's not that good. And we'll break all this down.
I thought it was good. When I was like, okay, B-, like, it's not that bad. Apparently not.
Yeah, it's not good. And we'll make some funny comparisons towards the end of this. So you'll see where we are in the story. Anyways, the stable outlook reflects our expectation that Strategy will continue to prudently manage maturities of its convertible debt. We also expect the company will continue to finance payments of its convertible debt and preferred stock dividends via issuance of debt, preferred equity, and equity while maintaining sufficient capital markets. Of course, even though they're not so hot on Bitcoin, they do look at Strategy or what Michael Saylor's doing as like they're not going to blow up. Yes, there's some concerns about the volatility of Bitcoin, but they're going to be able to pay this stuff back. Anyways, going further, the company's concentration in Bitcoin is key, and this is starting to, you start to get the idea of what the major credit ratings offices and agencies think about Bitcoin. The company's concentration in Bitcoin is key to its strategy and will likely continue to weigh on our ratings. This is the big contention here, is their view on what Bitcoin is. Is it actually a credit worthy asset to hold, or is this kind of a knock on your balance sheet? Obviously, from a Bitcoin's perspective, we've seen what Bitcoin does to your balance sheet, but from the official kind of authority figures out there, they're not looking at it the same way that we are. So Strategy's Treasury Reserve strategy gives indirect exposure to Bitcoin to investors. Of course, we know this, who can't have or prefer to avoid direct exposure to Bitcoin, while the strategy is public and easily replicatable. Wow.
Replicable.
It's replicatable.
Replicatable.
Yeah, I can't speak today, guys. Sorry. The company is unique in its scale. Yeah, it is. It is. And investors have ready access to invest in its convertible debt, preferred equity, and common stock. Replication of this strategy would likely pressure the multiples at which companies' securities are valued, but higher Bitcoin demand from new entrants would also likely be a tailwind in Bitcoin valuations. The strategy also creates an inherent currency mismatch. The company has a long Bitcoin position, a short US dollar position. Yeah, that's literally what it is. That's literally what it is. And here, this next part is where you start to see either their bias or maybe our bias. While we believe the company's negative total adjusted capital is a significant ratings constraint based on our treatment of its Bitcoin assets and our calculation of risk-adjusted capital, Strategy's risk-adjusted capital ratio was significantly negative, which drives our view of the company's capital and earnings. Because we deduct Bitcoin assets from equity when we calculate adjusted common equity, the company has negative total adjusted capital as of its second quarter 2025. We take this approach because we believe Bitcoin has significant market risk that is uncorrelated to traditional market risk. And because most of the company's assets are in Bitcoin and its Bitcoin holdings are likely to continue growing materially, we are likely to continue to view capital as a weakness. That is, I think, the biggest signal here of what they're saying. They're basically saying, hey, there's a currency mismatch. They're long Bitcoin and they're short the US dollar. And from the S&P Global's kind of assessment, they're looking at Bitcoin as, as we like to say, the most pristine collateral in the world. It's not backed by debt. There's no third-party middleman here. There's no counterparty risk, and they're viewing that as weakness on their balance sheet. So you can see we are still early to this Bitcoin thing. They're basically saying, and you'll see later on in this, and I'll skim the rest of it. They're basically saying, hey, you don't hold enough dollars, therefore we can't actually rate you and give you, a AAA rating because of this weird thing that you're holding on your balance sheet that makes us nervous. That is the big contention here, that yes, we got a Bitcoin Treasury Company to get a rating, but they're still either one, misunderstanding what Bitcoin is, or purposely saying, hey, this Bitcoin thing, we're literally not going to count that towards the favor of your company. It's actually kind of a negative to what we're trying to rate here. And I think that is the biggest signal of where we are in the story. Anyways, going a little further, the ratings also reflect the firm's lack of operating cash flow generation. Again, we've heard this before. Bitcoin doesn't have cash flow, guys. It doesn't generate yield, bro. How do we actually rate this? What is this thing you're holding?
Bitcoin is the cash flow.
Bitcoin is the cash flow. That's the whole thing.
It is literally the most liquid asset there is in the world. And they're saying, oh, stability. First of all, Bitcoin has become our new favorite stable coin. Let's just be super for real about that because the price has been going sideways for a while. But stability, I mean, sure, in the short term, Bitcoin has its volatility, but to knock it on its predictability is kind of laughable because it has its 4-year cycles. We know when it goes up, we know when it goes down. If it was truly volatile, if it was truly something that, we couldn't control and just like one day dumps to all hell for absolutely no reason, I would understand where they're coming from. However, Bitcoin doesn't really work that way. Over the long term, it's beat the S&P 500 as a whole. So just because it's not paying dividends, just because, it's not in the same system, like what they're doing is just othering Bitcoin, which is fair. It is totally different than every other asset because it's better, but it doesn't it takes kind of a paradigm reshift for them to understand that it is better, not that it's different and therefore it's bad.
Yeah, 100%. I think that's kind of, and we're gonna break this down more. I got a lot of Bitcoiners takes on this and the significance of it, but I think that is kind of what we're seeing right now is like literally someone said it in the chat, and this is the easiest way to kind of understand what this is. Chris C4232 goes, lol, deduct all the assets, then value a company. That's pretty much what they're doing. They're not counting, what Saylor has about almost 80 billion in Bitcoin. And they're like, actually, we're going to take that completely out of our kind of assessment of what this company is. And then we'll give you a credit rating. So obviously, I think their system is flawed in the sense that they don't know how to accurately price Bitcoin. And then that's like I think the main takeaway of this. But the significance of it is finally a Bitcoin Treasury Company does get a rating. So it is kind of the beginning. And obviously, we'll see as Bitcoin matures more, as Saylor continues to, elevate his game, that most likely will raise, maybe not in the near future, but it will continue to go up. So again, sorry guys for reading a lot of this, but I think we can learn a lot from this press release. So while there are inherent risks from the inherent currency mismatch in cybersecurity, we believe our view of capital captures these risks. Again, another highlight, the company maintains strong asset to capital markets, though this could change in a severe Bitcoin stress, or there are liquidity risks in our view from the company's convertible debt. And we see liquidity risk from dividends owned on the company's preferred dividends. While, they're looking at this and they're like, okay, they're doing good, but if the price is more volatile, maybe they won't be able to maintain where they are. And then again, here is where you start to see maybe a little more of their bias. And it goes, over the next 12 months, we could lower the rating if Strategy's access to capital markets is impeded either due to a marked deterioration in Bitcoin valuation or for any other reason, just whatever reason. Or we believe there's increased risk that the company will not be able to manage maturities out of the money convertible debt, which is something, they've been able to do. Anyways, an upgrade is unlikely in the next 12 months. Over the longer term, we could raise the ratings if, 1, we expect the company to improve US dollar liquidity, 2, Strategy reduces its use of convertible debt, and 3, the company continues to demonstrate strong access to capital markets even during a Bitcoin stress. So hey, they might raise the ratings if they, hold more dollars. Okay. Like their literal point is holding more Bitcoin.
This kind of sounds like they want Saylor to just like put all of that Bitcoin into an ETF or some other traditional finance instrument. I don't know.
I wonder why. I wonder why.
I wonder who would stand to benefit from something like that.
100%. And these are the questions you should be asking yourself. It's like, okay, 1, they obviously are not really taking Bitcoin seriously yet. Shows we're still early. And 2, who benefits from this? Anyways, this next one's from TradingView, and this headline, sums it up from a more traditional finance perspective. It goes, Bitcoin obsession costs Saylor. S&P tags Strategy as junk. So with this B mining rating, as I was telling Sophie this morning, it's basically, it's considered a junk rating. It's on the same level as companies that have gone bankrupt that are literally, spending millions of dollars, like bad airplane lines that are literally just burning jet fuel. And here they are, like more collateralized in any company. They have the pristine collateral in the world, which is Bitcoin, and it's literally on the same level as Hertz and Chuck E. Cheese.
Why don't they just give it an F? I mean, Jesus Christ.
So
harsh.
There we go.
Level as Chuck E. Cheese.
Yeah, same
First
level.
Of all, don't give no hate to Chuck E. Cheese, all right? Chuck E. Cheese was there for all of us in our childhood. Chuck E. Cheese, she's an icon, okay? But
wait, she's a female? Wow.
I'm a girl, dude.
Anyways, enough of that. Okay, so here is the Bitcoiner's perspective from this. Obviously, we kind of heard the traditional finance view of Bitcoin, and here is kind of where you get maybe the big significance and the milestone of what actually happened. Even though it was a subpar rating, this is what all the Bitcoiners are saying, and I'm going to defer a little bit here because, you know, I think they understand this a little more than me. I'm just a Bitcoiner. I'm learning on the back end, what all of this really means and the significance of this in our market. Here is Adam Livingston, who, of course, you guys know, he really came hot on the scene this year around Bitcoin Treasury companies. I think he's been doing pretty good work in regards to the Bitcoin Treasury companies, and here is his view. Breaking strategy given the first credit rating by S&P Global. It was given a B- rating. And this is the first known time a publicly traded Bitcoin Treasury company has been formally rated as such based primarily on its Bitcoin-based capital structure. But a B- rating is ridiculous. B- is junk status. Therefore, we continue to see that this company is completely misunderstood, and they're flagging high Bitcoin concentration as a red flag, when in reality, Bitcoin is the least risky asset. But we all know that. We all know what that means to us. Obviously, from their perspective, you could take the more gracious view here. They just misunderstand what Bitcoin is. Personally, I always go kind of Occam razor and who has the most to lose, like Sophie was saying. And we saw this play out when, you know, Bukele put El Salvador on a Bitcoin standard. We all wondered, why aren't more countries following Bitcoin or Bukele's lead and adding Bitcoin, you know, to their balance sheet as legal tender? Is because they don't want this to spread. And I think even though we are seeing a lot of Bitcoin treasury companies, they obviously do not want to, I don't know, give any good favor to Saylor and what he's doing with Bitcoin. I think on the one hand, because they know that what this actually is, as we've been saying for a long time, it's essentially a speculative attack on the dollar, and it's siphoning capital into Bitcoin, which is most likely what they don't want to do. Now, moving at the end here, I really like this last sentence. The risk models are not calibrated to reality. Again, we've been saying this forever on the show. The dollar, the traditional financial system, it's run on Fugazi. It's hot air. The way they measure things are not correlated to reality. And of course, this is why we're Bitcoiners. Bitcoin brings us back to that reality. Again, highlighting this point because most of the company assets are in Bitcoin, and its Bitcoin's holdings are likely to continue to grow materially. We are likely to continue to view capital as weakness. This is hilarious. So basically, quote, the more Bitcoin they buy, the weaker their capital becomes. That single sentence is the most revealing thing they've ever published about how the fiat risk model collapses when confronted with non-sovereign collateral. They're essentially admitting their capital model is tethered to fiat correlation, not actual solvency. We are so early. And this is what I kind of was telling you. And when we started, this is just showing you how early we are. Yes, Bitcoin is, you know, a $2.3 trillion market cap. It's been above 100K for hundreds of days at this point. The biggest institutional managers of the world are in Bitcoin. We have presidents that are in Bitcoin. We have ETFs, all of this good news. And yet you're starting to see how they really view Bitcoin. We still have a long way to go. But essentially, with this press release, it is kind of showing you where they can actually, where Saylor and Strategy can actually improve to get a better credit rating. Now, maybe from a Bitcoiner's perspective, you're like, do you even want a better credit rating? I thought we were all nuking our credit ratings here.
I honestly don't think it matters. At the end of the day.
Well, it does. It doesn't for us. And obviously, I don't think this has a real impact to Saylor's underlying business model. But this does send signals to people that are investing in, these credit products, and they are kind of, I would argue, pushing people away from them. So it
Well,
doesn't
what if
matter to us or the company, but it does matter to people that look at these ratings.
well, what if it does the opposite? What if it actually makes it so that people stop taking the credit ratings seriously, you know?
I mean, we could only hope. I don't think we are there yet, but we could only hope, because it is essentially telling us that these rating agencies literally have no idea how to properly value Bitcoin, which is continuing on the theme of we are still early. Like, people don't understand. Well, you could argue again. Two arguments here. They either don't understand Bitcoin, or they want to make sure that more people do not get into Bitcoin here. So, again, this is what early looks like, guys. This is what early looks like. Anyways, Jeff Park goes on a little more. He's at ProCap, which is Pump's Bitcoin Treasury Company, and he's continuing on a lot of beef with the S&P assess MSTR credit rating. But again, by far, this is the biggest below. Any asset owner would understand this is completely illogical. This doesn't just ignore Bitcoin's contribution to balance sheet resilience. Hello, uncorrelated, but it penalizes it. Again, that's where we are. And remember, Saylor's been dealing with a lot of this stuff for I think since he basically started. And I could only imagine, or started in Bitcoin, sorry. And I could only imagine that Saylor and the MicroStrategy team are just laughing at this and just like, oh man, like we are still so early to this that they can't even understand what this is that I'm doing. Like, he's probably chomping at the bits, like, I'm going to get to 1 million plus coins because we are still early to the game here.
I mean, so many innovators in their time were early to the game. Steve Jobs, when he invented the iPhone, he had a bunch of people telling him it would never work. People weren't going to be interested in a full screen touch phone. And he ate them all alive. He set the precedent for how we communicate today. So I think Saylor is doing the same thing in a way. He's getting laughed out of the room at first, but after they laugh at you, they join you. And you can see that from the way that other institutional, traditional banks are joining Bitcoin. JP Morgan is allowing Bitcoin to be used as collateral. So is Bank of America. So is Sophie Bank. So is Fidelity has had an ETF. They were one of the first ones. BlackRock. Uncle Larry. He's super balls deep into Bitcoin
Uncle
right
Larry.
now. And so it's a matter of time before, I think that honestly, these institutions, these credit rating systems, they are terrified of having power taken away from them, because they understand that people who hold Bitcoin, actual Bitcoin, are starting to hold the power, and they feel the shift and the tide kind of going in a different direction. So they are trying to do everything to other us, to delegitimize us. But Pandora is already out of the box. It's already been opened. It's already been accepted essentially by this administration. The obstacles have been removed out of the way, and it's only up from here. Just because, you give it an arbitrary rating that, let's be honest, the majority of people don't even understand. It doesn't like do anything for their lives. I think that at the end of the day, they're the ones that are going to be laughed out of the room, and not Saylor.
Yeah, 100%. I mean, who needs a credit rating when you hold Bitcoin, right? So anyways, no, dude, I got good credit. I got good credit.
You do?
No, I don't.
I'm like, since when?
No, I don't. I don't. I really don't. I'm trying to be an adult, but it's not working out so much. Anyway, so if you did say something that does lead to this tweet here that I saw that I think perfectly sums up what obviously we heard the TradFi view, we did hear some of the Bitcoin view. Of course, actually one more. Here's Mitchell Hoddle. Shout out to the Zoomer out there. He's like, B- is criminally low. The value of strategies Bitcoin holding is 5x greater than their outstanding liabilities, 5 to 1. They should be AAA, which is the best. Obviously, we are biased as Bitcoiners. We view Bitcoin as the best pristine collateral, the best money, uncorrelated from the traditional financial system, no counterparty risk, et cetera, et cetera, et cetera. 21 million hard cap going up forever, all the good things. So you can see kind of the pushback from the Bitcoin community that this is ridiculous, is an outrage. You heard it from the S&P Global agency themselves. They're like, you know what? Holding Bitcoin is actually a negative and it's hurting your rating. So we're going to give you the junk rating. But I really like this take here on Twitter. It is, I think, more balanced and objective. And he goes, S&P giving strategy a credit rating is probably the most notable event for Bitcoin treasuries this year. For the first time ever, one of the big three credit rating agencies has officially recognized a Bitcoin-backed capital structure as a valid corporate model. And I think this is why it is such a big milestone, not just for Bitcoin treasury companies, but for Bitcoin in general. They have decided that it is worthy of formal evaluation, scrutiny, and inclusion in traditional financial frameworks. It wasn't dismissed. Again, I think a lot of the things Bitcoiners were missing. Sure, it's a B mining rating, but that's just a starting point. The point is the game has now changed. Bitcoin is becoming a collateral class. Again, as Sophie was saying, with JP Morgan coming out and essentially saying, hey, we'll take your Bitcoin for collateral. And it's not just a speculative asset anymore. More importantly, Bitcoin credit is now being priced by the traditional financial system, and that unlocks everything. Fund managers can now justify an allocation to these strategy preferreds by pointing to the ratings covered as justification, though. I think most people would look at the ratings as a junk rating and probably look away. More importantly, it validates the idea that a company can build an entire capital stack on top of Bitcoin. It can use it as a monetary base and still maneuver in public markets. This is not just bullish for strategy. It's bullish for every other Bitcoin treasury company. And it's extremely exciting times for where we are going. And of course, eventually, as we're probably all thinking, this B minus rating, this junk rating will eventually become the AAA preferred rating, which basically means the safest, best thing to be holding.
Now that you say AAA, that reminds me of this little movie called The Big Short and how they dressed up a bunch of garbage, whatever that was. What was it? Bonds? Like
mortgage-backed securities.
Yeah, whatever. That they dressed it up so that it could be A, B, something or whatever. Like, so that it could look like
I think it was BB. I think
so that it could look decent.
Yeah,
Okay, but it
I
was
think it was
absolute garbage.
Yep.
So why are we still giving these credit ratings systems any legitimacy at all whatsoever? Like, we've already been rugged by the system and people actually lost their livelihoods from this system. So why would anybody take this seriously? Like, that's a real question.
Because they use these metrics for like their investing. So why we don't take the institution seriously and what they say, we kind of take it as maybe surface level or just like whatever. The people with the real capital out there, not just us plebs out here, stacking pennies. They look at this stuff and that's where they get their signal and they can justify allocating a bunch of capital into these markets. So for us,
I think I think all those people are insider trading like within themselves anyway. So it just doesn't make any sense. You think those people that are smart and have money like are going to be putting their money into like something that has to do with this credit score? It makes absolutely no sense. They have to be looking at the return. And the fact is that Strategy has been one of the best performing companies of the last 5 years. So make it make sense. That's just my opinion.
I couldn't agree more. And then just to kind of wrap this up, Kaiser did kind of, hey, it's not Meme Friday, but this is kind of a meme, okay, guys. So I'll feed you guys a little bit here. Here's Kaiser's take. The irony is thick as molasses. Warren and Berkshire Hathaway is downgraded on the very same day that strategy of Michael Saylor is upgraded. So, hey, maybe we don't take these credit ratings seriously. Maybe we understand the flaws in their thinking. But again, on the very same day, Berkshire Hathaway, they got demoted. And for the first time ever, a Bitcoin Treasury Company got a credit rating. So for us, It might not be the biggest news. You might not even want to invest in these Bitcoin treasury companies, but it is a historic milestone in regards to Bitcoin becoming a mature asset, and people looking at Bitcoin very seriously as something they want to actually hold, something they're actually allowed to hold. So it's not perfect. I'll grant that it's not perfect from our perspective. But again, a lot of the things that we see as Bitcoiners, I think it's because we are biased and we do understand what we're holding, that we expect them to kind of go all the way up front. We expect them to get the best results and, the most amount of capital. But you got to understand, a lot of these institutions, whether it's from a misunderstanding of what Bitcoin is or a more negative bias of what Bitcoin is,
both of those things.
Yeah, it could be both.
Both of those things are great for us, by the way.
Exactly.
Those are great signs. That means that we're all on the right path. That means they're scared.
100%. So, yeah, here we go. The fact that they were rated opens up a lot of new capital. Exactly. That's basically what we're seeing happen. And then we're
I pulled up a lot of these already.
That's what's funny. Y'all just haters because you got no dollars.
Oh,
Facts, dude.
Facts.
So hey, historic day in Bitcoin. You could argue, it's just a historic day, or maybe this is a nothing burger for Bitcoin. Like Bitcoin doesn't really care about a credit rating.
I mean, the price hasn't done anything. Bad. It didn't go up. It didn't go down. It just kind of like stayed where it was.
It's not too bad.
Oh, this October's been rough, guys. It's been...
Oh, wow. Okay. I got to move on. I just realized I've spent 30 minutes on this. That's crazy talk. All right, guys. I thought this was going to be a 15-minute bid. Here we go. I spent way too much time on this. All right, guys. Of course, smash the like button, comment on the show. Let us know what you think about it. And of course, hit the subscribe button. And before I go on, I do want to talk about our partner, Bitcoin Well. If you are in the market to buy some Bitcoin, make sure you check out bitcoinwell.com/simply. And when you sign up, you're going to get 3 chances to win 1 million sats. And the reason we love them is because they never hold your Bitcoin, which means they'll never lose your Bitcoin. And the Bitcoin gets sent directly to you in cold storage. Yes, this means you need a Bitcoin wallet, but this ensures that you will maintain the Bitcoin that you buy. Of course, you do have to figure out a little bit of a cold storage setup or, holding your own keys, which is daunting for a lot of people. But we've seen so many examples of exchanges losing Bitcoin, and they do it the right way where your money goes through and the Bitcoin gets sent directly to you. Okay, guys. So after this commercial break, we're going to talk about Larry Fink. Larry Fink did a conference yesterday, and he's continued to double down on Bitcoin. And then going further, we saw some interesting stuff come out of the White House in regards to Bitcoin. And then we're going to wrap up with, some light view on how just scarce Bitcoin really is. So we'll be right back in 1 minute.
I want to give a shout out to our partner, StampSeed. Is your Bitcoin in cold storage really secure? Are your seed phrases really secure? StampSeed's do-it-yourself kit has everything you'll need for you to hammer your seed words into commercial-grade titanium plates. Instead of just writing them down on paper, paper is fragile. Titanium plates are strong. Your words are actually stamped into the titanium plate with this hammer and these letter stamping tools. Once the words are in, they aren't going anywhere. No risk of the plate breaking apart and pieces falling everywhere. Titanium stamp seeds will survive nearly triple the heat produced by a house fire. They are also crush-proof, waterproof, non-corrosive, and time-proof. And now you can customize your titanium seed plates. You can upload your design or logo and they will laser engrave it on the back of your seed plate, the opposite side of where the words are. Stamp your seed on StampSeed and use promo code SIMPLY to get 15% off anything on the stampseed.com store.
Alrighty then, guys. So the current Bitcoin price is $115,440 per Bitcoin, which is a negative 8.5% decline from all-time high. The market cap is $2.3 trillion, and the current block height, I would argue, probably the most important number in Bitcoin, is 921,209. I repeat, 921,209. That is the current time in block time. Okay, so an interesting clip started going around of Larry Fink. And he's actually doubling down on something he said about a month or so ago. And again, maybe you don't like Larry Fink. Yeah, so
don't talk about my uncle, my now uncle.
Yeah, the Uncle Larry. But I think when Larry says something, it really kind of shows you where the future is going, whether you like him or not. You could argue that in America, the corporations actually control things. And so when Larry speaks, when Jamie Dimon speaks, it really is telegraphing probably where the future is moving, or as the saying goes, where the ball is going. So let's listen to this, and then I'll, maybe I'll put my tinfoil hat on for a second here, but it's a short clip.
Or if you believe that countries are going to continue to debase their currency, if you believe that there's going to be global rise of insecurity, owning crypto assets or gold are assets of fear. You own these assets because you're frightened of the debasement of your assets. You're worried about your financial security, you're worried about your physical security, and between crypto assets and gold, they believe, there's a strong belief that is a good hedge against optimism.
Okay. Jamie, you were a little...
A hedge against optimism. Wow.
I mean,
one of us.
Well. I don't know about all that per se, but anyways, for you guys,
he's been on Bitcoin Twitter, like it shows.
Well, I think you're honestly not that far off. Like I know you're kind of trolling, but I think
no, I'm super serious.
I don't think he's on Bitcoin Twitter. He's definitely
Listen, someone's in his ear. One of us is in his ear.
Yeah, who's Larry Fink's Bitcoin intern? Because he's doing a good job. But this was at the Financial Investment Initiative Institute. It's like a conference, and here's their website. I'll show you kind of what they're saying on their website about what this is, because I never actually heard about it, but it's got all the big guys there. They were just mentioning Jamie Dimon as well about the talk. And this is Financial Investment Initiative is a global nonprofit with a single pressing agenda: impact on humanity. Global, inclusive, and driven by data. We foster great minds from around the world and turn ideas into real world solutions and actions in 4 critical areas: artificial intelligence, robotics, education, healthcare, and sustainability. I mean, some of those buzzwords I'm not the biggest fan of, but
yeah, I was gonna say, sounds you like can a Fed meetup.
Here's unwavering in our commitment to produce powerful opportunities and actionable knowledge to help impact humanity at scale. Hey, at least they're talking about Bitcoin a little bit. So my as I said, if I put on my tinfoil hat here, I think what we're seeing, and I'm not the only one to be saying this. If you want really more breakdown of this, I've been kind of binging a lot of Simon Dixon's content lately, and I think he's on the ball with his analysis of what's going on. Again, I've been telling you guys, geopolitics and macros, like the to me what is interesting going on in the world, because Bitcoin's been a stable coin, and there hasn't really been too much going on in Bitcoin per se, even though we're getting so many good news revolving around Bitcoin. It's been a stable coin all year, and you're just like, man, back in the day, if Bitcoin had the amount of good news we've had this year, the price would be going crazy, and yet we've been stable all year long. Anyways, my like tinfoil view of this is ever since Larry Fink launched the ETF, I think he's been telling us a lot about where he thinks the future is going. As you heard in that clip, he basically said what we've been saying, what we've heard the Trump administration say, rather more in their actions than in their words, but that they're going to debase the currency. They got to pay back their debt. There's no possible way for them to pay back $38 trillion, even though they come up with a bunch of these different kind of strategies to fix that. We all know there's only one strategy for them to do that, and that is to essentially print their debt away. And they've been telegraphing this for a long time. Now, where Simon Dixon and I think most people kind of, split ways is he's been on this path saying that we are essentially seeing the US maybe accept that we are entering a multipolar world and we're no longer going to be, the world's leading superpower. And of course, Larry Fink, as head of one of the biggest corporations in the world, they don't really care about nationalism or country lines. They just care about profits. And so they're trying to position themselves as to where the future is going. And as we think is going to happen as well, is I think Bitcoin is going to be a huge part of that. And so with what he says, he's essentially telling you what is going to happen. They're going to destroy the purchasing power of the dollar. They're going to print a bunch of money. They're going to debase the currency. And therefore, the only place to really position yourself is in hard assets, whether for you could be gold. I know a lot of people like real estate. For us, it's Bitcoin. Bitcoin is the move. And then we don't even have to get into the whole stablecoin plays and all that stuff. That just complicates things. What we are seeing is they're going to destroy the purchasing power of the dollar. And if you want to protect yourself, you need to save Bitcoin. That's what they've been saying. Though I'm not the biggest fan of his meme, Bitcoin is the currency of fear. And if you want to hedge your optimism, you buy Bitcoin. I'm like the complete opposite. I think you buy Bitcoin because you are optimistic about the future, because you think we can figure this out. And there is a solution to the problem. That's probably why you're a Bitcoiner. We're not doomers here. We think this problem will get fixed.
Speak for yourself.
Are you a doomer?
I'm not a doomer, but I do think that part of the reason that I'm buying Bitcoin is because I don't like the way that the financial system is heading right now. And unfortunately, the reality for me is that I don't think a lot of people are going to assimilate that mindset until they understand, because something horrible has happened, either, through their finances or otherwise. I think that, fear and negative consequences are a real motivator here. And I think Larry Fink understands that. And he that's his way of convincing the public.
All right. Well, you did hit on something that I was saying the other day, that if you want to try to persuade people's behaviors, usually the best way is to scare them into changing their behaviors. So maybe he's good at persuading people.
I mean, yeah. Have you ever had a dog? Have you ever had a child? Like, sometimes sometimes people learn by fear. Sometimes people learn after they've gotten their finger burnt on the stove. And I think he's trying to warn people, and, believe it or not. And obviously his intention is for people to buy the ETF, his financial product. But if you keep going down the rabbit hole, first you get exposure to the ETF, maybe then you buy a little bit of Bitcoin and keep it on an exchange. And then finally you might lose a little bit of that Bitcoin on an exchange from a scammer and look into self-custody. And that's been the journey for so many people who hold Bitcoin today. And ultimately it's those, negative experiences and consequences that lead you to the final boss, which is self-custody.
Yeah, well, I think you did say something important there, where though I might not be as gracious. You said you think Larry Fink is trying to warn people. I would be more precise, I think, in saying that I don't think he's trying to warn everyone out there. I think what he's trying to do is warn his customers and his clients of what's going on. And hence why he's trying to get as much capital into the Bitcoin ETF, because he sees where it's going.
100%.
And that's what he's really trying to do.
100%, because the IBIT has been their best performing product, this year, is it?
Yeah.
So if it's been their best performing product, he obviously wants more people to buy into it. But regardless, what he's saying is it still rings true, no matter how you see it. And maybe that's the way that he kind of got orange pilled. I'm not going to say orange pilled, because I don't ever see someone like Larry Fink holding personal self custody. But I think that those negative consequences and the negative aspects of fiat are what made him open his eyes to the fact that he should maybe hedge his bets and not stay behind.
I mean, that last part, I don't know. I don't think he had this epiphany. I think he just realized it's probably going to become less profitable for them to continue in the fiat system.
I
So
mean,
they're trying to get ahead of that.
Well, that is what I'm saying. Like, he's seeing the negative. Look, I'm thinking about it from like his billionaire perspective, right? Like, for us, there are real world negative consequences. For him, it's like, you know, can I buy this same yacht and maintain my lifestyle 10 years from now?
Sounds like a good problem.
Yeah, it's a sick problem to have. You know, I hope we all of us Bitcoiners have that problem in the future. But that is what he's probably thinking about, and that's what motivated him. And those kind of like little personal fears are what he's trying to input into the public.
Yeah, I think there's some reason to that. I think he's obviously doing some sort of fiduciary responsibility for his clients out there and being like, look, you need to get some Bitcoin. This is why we're offering this Bitcoin ETF. It's no longer really just an option, like it's a necessity. And whether his intentions are good or not,
Still true.
yeah, exactly. He's still aligned in seeing, I think, Bitcoin in the short term do amazing things because obviously he's going to make a lot of money. Anyways, we'll be right back after this commercial break.
I want to give a shout out to our partner, Ledin, the leader in Bitcoin-backed loans. Unlock the liquidity in your Bitcoin without having to sell your Bitcoin. They've issued $9 billion in loans to over 10,000 customers since 2018. I absolutely love these guys. Not only do I have an account with them, but I also have a loan. And what I love about them is that there are no monthly payments, and you could pay back the loan at any time. As soon as you send your Bitcoin as collateral, you'll have cash in your account within 24 hours. Over 1,000 five-star customer reviews, and they've never lost a single dollar or sat of customer money. Go to learn.ledin.io/simply today, and you'll get 0.25% off your first loan. I want to give a shout out to our partner, sat123.com. Sovereignty isn't just about your money. It's about your communications too. When the grid goes down, most people go dark. Cell towers fail in hurricanes, cyber attacks, and blackouts. But satellite phones, they don't rely on local infrastructure. Iridium has 77 satellites in orbit, giving you a direct line anywhere in the US, even offshore. If you hold your own Bitcoin keys, you should hold your own comms too. Sat123.com also has everything you need to start building your Bitcoin citadel. Starlink, battery backups, Faraday bags to protect your hardware wallets, and much, much more. It's a one-stop shop for anyone serious about resilience and off-grid independence. Stay connected, stay independent, stay sovereign. Go to sat123.com/simply today and use promo code SIMPLY to get 15% off anything on the store. I want to give a shout out to our partner, BitKey. If you already self-custody your Bitcoin, you know the deal with hardware wallets by now. Complex setups, clumsy interfaces, and a seed phrase that can be lost, stolen, or forgotten. BitKey fixes that. BitKey is a multi-sig hardware wallet built by the team behind Square and Cash App. It packs a cryptographic recovery system and built-in inheritance feature into an intuitive, easy-to-use wallet with no seed phrase to sweat over. It's simple, secure, self-custody without the stress. Time named BitKey one of the best inventions of 2024. Get 20% off at bitkey.world. That's BITKEY.world with the code SIMPLY.
Hey guys, it's me again with BitKey ASMR. You want to get your 20% discount using promo code SIMPLY and scan the QR code. Guys, I'm tired. I just don't have it in me today.
Okay. Let's keep it moving.
What was in the coffee today? Like, I'm just like...
All right, guys. So, this is actually kind of a story that really went under the radar the last couple of weeks. I did see some people talking about it, but we got an interesting new bill that I think is a direct reaction to this news. So you can see here, this is on Yahoo Finance, and this came out October 24th, but I did hear some Bitcoiners talking about this a couple days before. Actually, it's probably around the same time last week. So Donald Trump's new White House ballroom attracts funds from Ripple, Coinbase, Tether, and Gemini. And I know you guys have been seeing, if you're in the US, you've probably been seeing a lot of the politicians out there. I know, I'm sure you guys caught the kind of hilarious back and forth between Clinton and, Hillary Clinton and Trump around the ballroom. Just comedic gold, to say the least. But it is interesting that is basically being funded by, Bitcoin crypto companies. And of course, he did just pardon CZ from Binance last week as well. And it is starting to raise a lot of concerns for people. So I'm going to read a little bit here, and then I'll show you kind of the response of this. And I don't think it's a coincidence that we're seeing this, though. The person that it comes out of, I thought was a Bitcoiner, but I'll get to that in a minute. So what happened? The crypto industry, a longtime backer of Trump through campaign and inaugural donations, including an 18 Bitcoin contribution from the Winklevi twins, is now supporting the 300 million, 90,000 square foot ballroom announced in July and under construction since September 2025. Of course, the new venue will seat 650 people, whatever. Major tech firms such as Apple, Google, and Microsoft are also contributing. So it's not just Bitcoin crypto companies. There is some other tech companies, which probably opens up a whole new can of worms, but we're going to focus on the Bitcoin stuff here. So why it matters: the donations reflect the deepening ties between Trump and the crypto industry following his administration's pro-crypto policies. According to the Financial Times, Trump's personal crypto empire is now over $1 billion in pre-tax profits. Of course, he's been pro-Bitcoin, et cetera. And so a lot of people, obviously, I think this is giving people ammunition on the other side of the aisle to kind of paint Trump as a pay for play kind of president, and being a dictator, a tyrannical authoritarian, et cetera. We don't have to talk about the greatest stock trader ever being on the other side of the aisle here. But anyways, the reason I bring this up today is because we did see this happen as well. And it kind of surprised me because I thought he was a Bitcoiner. So U.S. Congressman Ro Khanna, of course, he's a Democrat, to introduce bill that bans the president and elected officials from owning or creating cryptocurrencies. Now, obviously, the creating crypto part, I'm probably not against. I think, it's Bitcoin. It should only be Bitcoin, but who am I? I can't tell people what to do, but you shouldn't be buying this stuff. You should just be saving in Bitcoin. But I specifically remember Ro Khanna come out and be pro-Bitcoin. Wasn't he at the Bitcoin conference? So I know it could be party lines and stuff, but as I've been saying,
I think he's just to play devil's advocate, he's probably just against politicians holding assets that he knows they can manipulate, the price of. That's kind of the TLDR. And
I like that. Maybe this is a pro-Bitcoin stance.
I'm not super against that. Yeah. I'm not super against that. I think that, Bitcoin has great incentives. I think it is the one that does stand out, though, because you can't, no one person can single-handedly really manipulate it. And it is completely decentralized. However, I can understand from the Democrat perspective why they wouldn't want people holding office to hold any, don't limit it to cryptocurrency. Don't trade stocks, don't trade, other financial assets either while you're in office.
Wow.
Keep them in hold.
Hey, let's not attack Pelosi like that. That's mean.
Pelosi's my girl, dude.
But look, this has been one of those conversations that a lot of people have been talking about. So I don't think it's necessarily a bad thing. I actually kind of agree with it. We shouldn't have politicians creating shitcoins. Maybe hot take. I don't really think it is so, but hey, I'm a Bitcoiner. I know my bias. But as you can see, like the party lines are still being drawn out here. And even if you are pro Bitcoin, you know, politicians are going to politic at the end of the day. So I'm sure there's something deeper to this, but this has been one of those concerns. I've heard a lot of people talk about the fact that some of the biggest Bitcoin companies are funding this ballroom, and it's really starting to make people wonder what the incentives are. And so, look, this is where we are in the fall of the republic. At this point, I don't know. It's reminding me of Banana Republics, pay to play, but look, I think Bitcoin's gonna win at the end of the day here. Anyways, I'm gonna keep it moving because we're running a little late. And guys, look, I know it's not Friday, but it's gonna be a meme Tuesday kind of day. Okay,
Yo,
so
literally, like I looked at Opti and I was like, it's only Tuesday.
I know
This is crazy. I
Cool.
don't know what's in the air, but I'm just like, I'm really tired.
meme.
today.
All right, so meme Tuesday for you guys. We're gonna chat about a meme.
Yes!
We're gonna chat about a meme. It's not meme. I'm not just gonna show you memes.
Oh, it's
We're
not
gonna
meme review.
No, it's not a meme
Boo.
review. It's not a meme review, but we are going to chat about a meme because I think you know, as memes, they do pack a lot of wisdom into a short
All right,
picture.
get everybody in the chat right now. Meme review is back.
No,
I'm
it's
kidding.
not. It's not. I am
But-
talking about a meme though.
Some semblance of it.
Yeah.
is-
Okay.
is
All right. Enough. We'll be right back.
I want to give a shout out to our partner, HIVE Digital Technology. Why HIVE in 2025? Unstoppable growth. As the first ever public miner, HIVE's position to quadruple their global footprint, making them one of the world's fastest growing miners in 2025. And with elite operations that consistently top the industry in Bitcoin mined per exahash, HIVE's now headquartered in the USA. They're lean and mean, they're green and clean, and they're rewriting the playbook on sustainable Bitcoin mining. You can catch the latest buzz at HIVE Digital Tech or at hivedigitaltech.com. I want to give a shout out to our partner, bitcoinben.io. If you're into freedom, Bitcoin, and building a real community, this is for you. Gain exclusive access to real-world, members-only, private clubs across the globe, featuring poker nights, expert-led classes, co-working spaces, educational meetups, live events, and more. Current locations include Sarasota, Nashville, Boston, Dallas, Las Vegas, and St. Louis, with new clubs launching soon in West Palm Beach, Scottsdale, Alabama, and beyond. Not to mention Bitcoin Ben's resorts in El Salvador. There's 3 of them, and they're absolutely beautiful. You'll also get access to the first fully backed Bitcoin bank with fiat ramps and savings accounts. It's called Private Key Bank, and you guessed it, it's based out of El Salvador. Go peer-to-peer with Bitcoin bulk buys, tap into home equity for long-term Bitcoin growth, and join their exclusive mining pools if you're interested in mining. What are you waiting for? Head over to bitcoinben.io, join today, where Bitcoin meets freedom.
Oh man, chat, you guys are funny. Chat slayers. Okay, so I guess PSA here before you guys throw your tomatoes. This isn't a meme review. Okay, Sophie was overselling it, but we are going to talk about a meme because it does kind of continue the conversation from yesterday. Of just, I fundamentally think people don't understand just how scarce Bitcoin, or maybe they don't even understand what scarcity is. Okay, maybe that's,
we live in an
maybe that's the problem here.
We live in a society that over consumes everything. So absolutely not. We do not understand what scarcity means. We don't even know where our food comes from. When you ask people, they say the grocery store.
Yeah, I mean, technically not wrong.
I'm going to pretend you didn't say that.
From a 42 IQ perspective, it's not wrong. Okay, anyways. Sailor or Strategy did drop a meme yesterday, and I think it just, like, I knew this, but when you read it in just kind of a short form, you're like, man, Bitcoin is super scarce. Like, they're really there's a lot of people on planet Earth that haven't woke up to this, and we're all going to be scrambling for a very small amount of Bitcoin for the next 100+ years. And I don't think people really understand what's going on. I think a lot of people feel that they have all the time in the world to acquire Bitcoin. And, once you first understand Bitcoin, or rather once it clicks, you do get this sense of urgency of, oh man, I need to acquire as much Bitcoin as soon as possible because you never know what's going to happen. And I think this meme is kind of a perfect example of this. So it's just a simple meme, guys. It's not the best meme. I'm not gonna, I'm not gonna hold you here. It's not the best meme, but it does make a very stark point. So Strategy tweets this, and I love the not investment advice. That's how you know it's a meme. And it goes, digital gold rush in 21 days. So this was yesterday. So in 20 days, 95% of all Bitcoin will have been mined. Of the remaining 5% of the Bitcoin, 4% will be mined by 2035. So in 10 years, of that 5%, 4% will be mined. And then from then on until 2140, everyone will be fighting for the last remaining 1%. Take action now. Buy some Bitcoin. Saving some Bitcoin. It really is crazy that, we're 16 years into this. 95% of all the Bitcoin that will ever be created or mined, and everyone is still asleep at the wheel, and they don't realize the opportunity they have. And it really does remind me of how we always say, people are going to come up to us and be like, you should have warned me enough. Or like I played it yesterday of Eric Trump saying, or maybe it wasn't the right clip. Maybe I played a different one. I saw a clip of him yesterday, and he's like, everyone comes up to me and says, I really wish you would have forced me to buy Bitcoin. He's like, what do you expect me to do here? And we've been saying this. I've been saying this on the show, that I really do believe a day soon is going to come where everyone that you've ever talked about Bitcoin is going to come up to you and be like, I really wish you had forced my hand more to buy Bitcoin, because there's just not that much Bitcoin.
You thought I was annoying. You thought I was annoying, and now you wanted me to force you, dog? Like, no. Personal responsibility.
Yeah, exactly. But hey, 95% of all the Bitcoin will be mined in 21. Actually, let me pull Clark Mooney's dashboard, because I know he has it in here somewhere. Oops, wrong one. And we can verify where we are right now. So let me share this. We can do this together. Here's Clark Moody's dashboard. If you've never been here, all of the Bitcoin numbers. Let me see. I forget where it is here. So I'm gonna look real quick. There you go. Percentage issued currently at 94.95%. And of course, let me see it. Do they have the? I don't think they have the 95% date here, but yeah. Anyways, that's the number I wanted. Here we do. Yeah, we do. 95% of the supply, November 16th. So that is 18 days from now. Wait, no. How many days are in October? 31?
31.
So, 20 days, 20-ish days, maybe 19, whatever. Anyways.
The point is, you're not stacking hard enough.
Yeah, that is literally the point.
And to our audience, we know that we can bully you into buying more Bitcoin. To our friends and family, it's a different story. We don't want to be that annoying, right? We don't want to be social outcasts. But it's funny because everybody's annoying until they're right.
Well, I'm annoying even when I'm right. So
I'm annoying because I'm right.
Yeah, and Bitcoiners are right. So I guess we have the right to be annoying at this point because we are right. But yeah, man, look, I think the game around Bitcoin is only going to accelerate. Remember, most of the Bitcoin is held in self-custody. It's held by individuals. And if we are entering in about, 2 weeks-ish, maybe 3 weeks, closer to 3 weeks, the final dash for the last 5% of Bitcoin, it's going to be the next 100 years. The next 10 years is going to be for the final 4%, and the last 1% will be 100 years. I think we're going to start seeing some crazy action in Bitcoin. This is one of my fundamental theses. Luke and I always talk about this when we meet up and we talk, is the idea of a diminishing returns. And I'm like, very few people hold Bitcoin. And once they all wake up to trying to get some of this Bitcoin, I think diminishing returns is going to break. Now, is that this year? Probably not. Who knows? Who knows what's gonna happen this year? But I think in a long enough time frame, we will see some crazy moves left in Bitcoin because not that many people hold Bitcoin. So, you know, we're playing a game of accumulation. This is the hungry hippo. Hopefully you have more sats today than you do yesterday. Hopefully you have more sats next month than you do this month. This is how you win and play the game. All righty, then. The next 4 years are going to get crazy. Yes, 100%. I am with you 100%.
I'm with this guy. I'm with Sophie on this one. We are annoying because we're right.
Yeah. Yeah. I couldn't agree more. All right, guys. Well, that's it for today. Soph and I are going to sign off and
sleep.
Yeah, and relax and maybe I was going to say go get a massage, but I'm totally not going to do that. I'm going to go sit on the couch, guys, and do some work.
Contemplate life.
Yeah, I'm going to
stare at the Bitcoin price.
No, I'm good, dude. I'm just honestly low-key, guys. I'm kind of sore today, and it's been a rough morning.
I'm kind of pregnant today, so I'm just like honestly sitting down is exhausting, and the acid reflux is at an all-time high.
Gross. Okay, enough.
It's a lot.
Enough. Okay, that'll be. Honestly,
we gotta let me stop talking.
Yeah, I was just about to say we gotta not have Sophie talk at the end of the show.
I'm so happy Nico's almost back. Believe me, I'm happier about it than you are.
All right, guys. Of course, we love you guys. We appreciate you guys. Thanks for all the support throughout the years, every view you've ever given us from watching a show, every comment, it means the world to us.
And if you want to keep supporting us, check out our merch on the website, www.simplybitcoin.com. We just got a new drop, new designs, new hoodies, new hats, all the good stuff.
And Sophie's shipping today.
Yeah, so
so you'll get your merch soon, guys. Thank you.
Yeah, sorry.
Yeah, so struggling over here. All right, guys. Anyways, we love you. We appreciate you. Have a good rest of your day, and we will catch you on the flip side tomorrow. Peace out.
God, you just reminded me I have to leave
wrong
my
one.
house.
Today's episode was brought to you by BitcoinWell.com, a Bitcoin-only platform on a mission to enable financial independence.